Hi guys. So for the last few years, one of the big things that you've been hearing from anybody that talks a lot about investing and economics and stuff like that has been a strategy called investing in debt as opposed to traditional investment tools. And I think a lot of the people that try to explain this really dropped the ball. So I figured I'd put together a video for you so that you could understand better how to invest in debt. The first thing you need to know is that debt investment can also be called inflation-induced debt reduction, okay? So with a traditional investment, you buy into a stock or something like that, and hopefully it goes up. Or you short a stock where you get a margin account, you sell a position to a third party, and then you buy to cover your shares, okay? That's shorting a stock. There's also ETFs where you can buy on the upward swing, or you can short without using margin account so that you're never exposed to a margin call. Anyway, this, however, is a great strategy for a world that is suffering from hyperinflation, because when you buy into debt, what you're really doing is you're capitalizing on hyperinflation, which is what our politicians are doing right now. Okay, so inflation-induced debt reduction and how you can make money off of extreme inflation, okay? So it comes down to buying properties that are going to go up in rent naturally due to inflation, and buying those with a note. You wanna make sure that you're buying them, you don't wanna buy them outright. You wanna make sure that you're buying them with the bank's money or somebody else's money. So, first thing to understand, the US average inflation since 1960 is 3.8%, okay? If we compound that, that means that the net inflation over a 10-year gap is roughly 145%. With that said, let's say that you buy a property and you carefully buy it and your rent is $1,500 on month one for your tenant, okay? Now we're hoping that the note that we carry is gonna be somewhere in the realm of $1,500. We wanna have as little money out of pocket as possible, and we wanna basically take the money from the tenant, pay the note, and then just basically be carrying this property and letting the tenant pay for it and have it become an asset for us over time. With that said, like I say, if on day one you buy a property and your rent is $1,500 a month that you're receiving from the tenant, and your note is also $1,500 a month, that's great. There's probably gonna be some unforeseen circumstances where you're gonna have some money out of pocket, but essentially you're building equity and you're moving towards owning the property without having to spend a ton of money on it. But this is where it gets good. Your principal on that loan doesn't go up unless you just ignore the interest, right? But essentially the amount of money that you paid for it is always gonna be the same amount. However, 10 years from now, the rent, just due to normal inflation, just at 3.8%, the rent will go from $1,500 to $2,175. So you're still paying that smaller payment on the house. However, the rent's gone up to $2,175. At year 20, just with normal 3.8% inflation, the rent's at $3,154. Now this is where it gets good, and this is why using buying debt is right now great, okay? So let's say that we continue to have the inflation rate of 8.5%, okay? Let's say that we have that for 5 years, right? If we had that for 5 years, let's go, and we're gonna compound that by 5 years. So if the inflation rate continues to be 8.5%, God hope it doesn't, but if it does, instead of it taking 10 years for your rental property to be renting at $2,175, it'll be renting at $2,175 after about 4.5 years. So the rate at which you will be raising rate just to keep with inflation will be extreme. And it can be even worse, depending on how we're able to deal with the financial circumstances that our country has right now. Inflation may stick at 8.5, it might jump up to 10 or 12, and it might go for years and years and years. So there's a very good chance that if you did buy a rental property right now, even if you're a little bit in the red at the beginning, inflation should drive that rent up very quickly. Anyway, Hope this helps. Post a question in the comments. If you have anything, give me a like, give me a subscribe. Thanks, guys.